Okay, everyone, welcome. Hope you guys are having a good Saturday so far, wherever you might be at. And I'm kind of just getting started for today. I was just scanning through some charts this morning, looking at what we want to talk about. If you guys are new to the live stream, then this live stream is typically for my subscribers, and we go through the stock picks that they want to look at. So I'm going to give it a couple minutes, just let a few people join in, and while we're waiting, we can kind of just talk about how the week closed out. Obviously, commodities are ripping. Like everybody's piling into the commodity trade now. It's not a trade that I'm super interested in at the moment, just because it's like that. It's a parabolic mainstream trade basically. So I'm looking for this to be, these parabolic moves we're seeing in commodities to potentially be faded. But copper is kind of interesting here, because you see copper basically has been consolidating for, almost a year now. Not quite a year, but just about a year, and pretty impulsive breakout so far. So yeah, I'm not fading any of these. I'm not shorting anything. I don't chase moves. All right, I talk about that on my channel a lot. I don't actually, if a move leaves the train station without me and it just is ripping to the upside, I don't chase it. All right, I look for key strategic entries, and oftentimes the strategy that I'm teaching is a strategy that will get you into a trade ahead of the crowd, or ahead of them. It's kind of, I like to think of it as where the smart money gets in, where they're accumulating trades, or just starting to get in. If we look at oil stocks, to give you guys an example of just how my trading strategy typically works, something like XOM. All right, you go back and look at my video in November of 2020. I don't remember the exact day, but somewhere in November of 2020, I started talking about oil stocks, and I think the thumbnail that I have on that video is oil stocks. Oil stocks look really bullish down here. All right, nobody liked oil stocks. Now, obviously, this is a monstrous move so far, but now everybody wants to pile into oil stocks. Not the time that I want to, typically. Although I do own some oil stocks in a different account. I own some Royal Dutch Shell and some BP. So it's all good. And all right, so let's go ahead and get started, guys. I'm going to go for maybe 45 minutes. We'll see. And basically, we're going to go through subscriber stock picks. I'll talk about kind of where I think markets ended out the week, where it looks like they're heading next week. We'll look at individual charts. You guys, all I ask from you is just in the comments, try to keep your stock requests to one pick per subscriber, maybe one or two. I want to give everyone an opportunity to get me a chance to review a chart, and then just drop me a thumbs up. That's really all I ask for my time on Saturday. So let's get right into it. All right, so we'll start out right now with Qs. I always look at the Qs, and XLF was interesting too, so I do want to look at that one. I was watching that on Friday. All right, so Qs, we did get that breakdown. We did test that resistance line. I talked about that for a couple days. I thought that this might be the where we get rejected, because it was at resistance. I was looking for it to be rejected right there, and it was. So Friday sold down. Nothing super impulsive, but the other thing that I'm seeing is this candle on Qs was a bearish engulfing candle, and we did get confirmation or follow through. So again, still sell the rip. I don't see any change in that structure or that trading strategy as of right now. So any kind of rip bounce into the resistance, maybe we do that. All right, I'm looking to sell the rip. All right, I'm looking to short, add to shorts, basically. I don't think that's what's going to be, but you know, we're so close to the trend line, we could chop around here. If we break the trend line, then that's going to change the picture a little bit. So if we break it to the upside, we'll probably want to exit our shorts and just let that play out. You could obviously go long as well on a breakout. Where I think things are going though is I think we're going to head back down to these lows right here. In this area, we'll probably have a bounce, maybe down there they'll bounce it up to this trend line again. And then from there, and I'm just giving hypotheticals, I have no idea of, where it actually will go. I'm just giving where I think it'll go. And then from there, it'll come down and hit our second target, all right, down there at about 298, 300. I'm looking, it's about 300. All right, at that point, that's likely going to be the final move in this downside move before we get some sort of a multi-month rally. I'm just assuming that's, maybe we rally for a few months and do something like that. But I do think we'll probably roll over in the future, in the distant future. But for now, 300. All right, that's our target on this one. And if things change, then I'll change my, analysis. But for right now, that's what I see in the charts. Looking at SPY, you can see here SPY. I don't really have it marked out, but we've got this downtrend here, like that, and so the SPY's target's about 400, and yeah, that looks within reach. It's not too far down from where we're at on this one. It's another 7% or so. SPY's going to fall less than Q's because it's got defensive plays in it. It's got stocks that go up when the market goes down. I mean, Newmont Mining is in the S&P 500. So there's stocks that are kind of, that keep SPY from falling as much. And that's why if we're looking for downside, I typically look to play Qs or IWM, which is the small caps. So IWM just looks like it's flagging out. I see no change in that. I got a flagpole here. I've got the flag, well-defined flag. And, we don't have a breakdown yet. We don't have the continuation, but typically that's what this will look like. And the thing is, you have this big long sideways trading range. We're down below it. There's a wall of resistance overhead right there at 209, because all these traders up here that were buying IWM long, there's a lot of traders that what they saw, and I know it because I saw it on YouTube, these guys excuse me, recognize the source. All right, if you guys are listening to other people on YouTube, and they're, a lot of these guys are, some are my age, but I'm in the older end of the millennial age. I think about as old as it gets, and a lot of these guys, all they know is a bull market. Okay, they don't know anything about a bear market. These guys were in junior high, and they were in elementary school at the depths of the last recession. So all they know is a bull market. So they're just naturally biased bullish, and they just don't know what to look for. So on IWM, they probably saw this as a bull flag, this big, huge. They probably were like, "Oh, this is a humongous bull flag, and we're going to break and just off to the moon forever," And if you just look at price action, then you're going to see that. But what I saw is a topping pattern, because I saw this big negative divergence. I don't know why my lines keep getting jacked up, but there was a big negative divergence. So each one of these pops up to the top of the range was a divergent high, and especially this one right here. This was a breakout. The bulls saw this as a breakout. They're like, "Oh, we're breaking out of the range, off to the moon, it's time." That was a breakout that occurred with negative divergence. And we had, fell back within the range. Once you saw that, it was pretty obvious, at least to me, that, okay, we're at least at a minimum going to the bottom of the range and most likely going to break to the downside. So far we have. So I got this this bear flag, and I've got it continuing down. Right now, it's setting us up for about 175, 176, but we're so close to this target of 170, and that's your former highs. It is a range, you guys. This high right here was at 173.75, and that's, so we'll just call it a range, all right? A range of support. We get that close, we don't need, I don't think it makes sense to hold out for the exact penny of 170, although I do think you'll get it. What I would probably do, the way I would treat it, is as we start to get down to this area, if we start getting in this 174, maybe 25 cents off of this first level of support, I think it makes sense to start covering, most of the trade, and maybe leave a little bit left to capture the final little pennies if you can. Or maybe it'll overshoot, that's possible too. So take some off at least is what I would say. In my opinion, I'd take some profit off at close to these support ranges, and then you could keep a little there and let it see if you can get, more to the downside. All right. So that's IWM. I don't see any change. You look at, Friday, we kind of, no big change here, no technical change. We're just within the flag, so it can chop around. I don't know, when it's going to break, but I think it will break. That's the point. So that's why I don't trade options. I don't like to trade options. For one, I find them confusing. Straddles and iron condors and buy this option at this time frame, and so it's a level of complexity I just don't think is necessary. If you have super high conviction in a trade and you think it's going to break right then and there, then yeah, options is the way to go. But again, to time that market, to time when something's actually going to break down, is just adding a level of complexity that at the end of the day, if you only trade options, you might get the direction right. Maybe we're going to go into a bear market. You could maybe say, okay, I know we're going to go into a bear market. You might end up losing money and getting the call right, because your options keep expiring. There's all kinds of algos set up to make options expire. They know where the bulk of the options are at, and they'll make a counter trend move. They'll run something against the current trend just to get those options to expire worthless, and then they'll continue the trend. So I don't want any part of that. What I'd rather do is just, I go long stock or I sell short stock. All right. If you guys don't understand what selling short stock is, then for one, I think you need to do a little more research before you get involved in the market. And then two, you can take my course. I don't really go into the detail of selling stock short, but if you don't know what it is, I think you need additional skill set on trading, and that's what my course will give you. So definitely take that if you haven't done that. But I'll give you a quick rundown of what selling stock short is. So instead of buying stock, I borrow the stock from someone. I don't know who they are. It's all done programmatically through my brokerage, and I sell the stock short. So I basically borrow it from them at a certain price, and then when I cover the stock, I buy to cover. I return the stock back to that person at the lower price, and I collect the difference. In my brokerage program, what I do is I plug in the amount of shares I want to short, and instead of hitting buy, I hit sell. I click the sell button. Now I use Lightspeed Desktop Trader, so it's a desktop application with direct access to the exchange, to the like Arca and Edge and all the exchange. I forget what they call them, the routing portals. And my program makes it very easy. I just enter the shares and click sell, and it automatically shorts. And then in my position summary, I see a negative in front of my share count. I see, like, if I want to short 100 shares, I'll see negative 100 shares. And then to close the trade out, I just buy the shares back. I hit buy. So it's the opposite of buying low and selling high. I sell high and I buy low. That's what selling stock short is. All right, so And that's my preferred method. And I just leverage up, or I'll just take big position sizes. So when stocks move, it works out really well, even though I don't trade options. Okay, guys, that's about as much as I've got on the general markets. I do want to cover gold real quick, and then I'll get into your stock picks. These are just kind of the basics, right? This is our bread and butter. Just gives us kind of a general outline of what's going on. All right, guys, so there's your breakout. There's the move that I've been talking about for. I mean, look, the breakout came right here. All right, we had the breakout. I talked about it. I've been hammering on this thing for a while now, saying this is exactly what I was expecting, and there it is. So now that that's showed up, that's money in our pocket if you've been positioned in the trade. And I've got this line here. I drew it out as potential resistance because we had some reactions right through here back in 2020 area, another tag right there. So I kind of marked that out as potential resistance. We closed above it, as far as I can tell. And again, it makes sense that we're seeing a pretty impulsive breakout because this was a big, long consolidation pattern that was, really from August 2020, it went into correction. Everybody thought gold was dead. You'll start hearing it in the mainstream media how gold is acting as an inflation hedge, and it's, you'll just start hearing about it once it's got to do better. But once it gets probably above the all-time highs, that's when you'll start hearing about it. All right, they'll start. You'll hear Kramer saying, "Oh, I think you need to buy gold stocks and this and that because they look good." After they've doubled in price, that's when he likes them. As far as I can tell, guys, we're going to be in the range now. We're going to be in this range, all right, which is the all-time highs of, it's about 2075, and then potentially, I need to see some reactions down here to validate this as a level, but I think it's probably close to some sort of a support level. Excuse me. Yeah. So again, here's your bull market in gold, 2018 lows, and just to me, looks like we are making our next leg higher. And what's extremely bullish about this thing is I look at the dollar and the DXY. Now the DXY is a currency pair index. It's got the euro in here, and it's got the dollar, and it's got the yen. I think that's primarily what this is. There's some other ones, but those are the big ones. And the dollar's been rallying primarily against the euro. It's been rallying pretty strong. But again, the dollar is, the dollar's being bid, and gold's being bid too. So there's a massive, I just don't see signs that the bottom of this market is in. I'm seeing safety trades. The dollar's a safety trade. People are just rushing to the dollar. You've also got gold getting bid. And then we've got the VIX elevated. Look at the VIX. Here's the VXX. It's not the exact VIX, but this is a way to track the VIX. Closing, near the top of the range here on this VXX one. The VIX is elevated. The bonds, relatively elevated. Bonds aren't that interesting to me, but right now, so. Gold catching a bid while the dollar's rallying just shows there's just overwhelming amount of demand. I don't buy a lot of physical gold. I've got just a little bit. I'm more interested in like the miners, because they're leveraged and you can just make a lot more money. But I did buy. I see the inflation thing running, guys. I went to the gas station I went to the gas station last week and my gas went up 30 cents within about 3 or 4 days. And then as I drove by the gas station yesterday, it had gone up 10 cents from the day before. So, that's crazy. And then I bought this gold, an ounce of gold. I think I paid $18.30 for it with the shipping and the fees and everything. And I'm looking at the prices of what that gold is now, and it's already like $20.30. So it's gone up $200 within, I don't know, a week or two. All right, so that's crazy. All right, I'm going to get into the stock picks you guys want me to look at. We'll start at the top. Drop me a thumbs up, guys. And again, check out that stock course. I know not everyone on this live stream is taking it. If you haven't taken it, I think it's worthwhile to take it. It's about a $99 course. That's what I charge for it because I don't want to give my time away for free and my energy and my effort. I put that together. I put that together for you guys at your request. When I had a lot of different subscribers asking me to put together a course, I decided to do it. Everything on this channel is about real trading, all right? I don't make my money from entertainment and from YouTube, all right? I make my money from the markets. A lot of the guys who act like stock gurus, I know, I don't really want to call them out, but a lot of the guys, they just make their money from YouTube, and that's why they'll flip-flop and wishy-wash all over because all they want to do is just go with the way the market is actually going to keep you interested and keep you watching their channel, all right? Because that's where they're making their money. And then they take that money, invest it, or put it into a bunch of stuff, kind of flaunt it a little bit, like, hey, guys, I got $20 million in the market, check out my stock course. And that's their way to try to trick you into like, I made all this money in the market because I'm so good at it, so take my course and you can too. When the reality is that I made all my money because I've got a huge YouTube following, and I just need you to watch my videos because that's where I make my money. Well, how are you going to make money from a guy who makes his money from YouTube? All right, he's not teaching you anything unless he's teaching you how to create a YouTube channel and how to get a bunch of YouTube subscribers. Okay, take that guy's course on that. That makes a lot of sense. Taking a guy's course who makes all their money from YouTube is not on how to trade stocks. No, what you want to do is take my course, who's a boring, I'm a boring stock guy who, all I talk about is the intricate details of charts and stocks, and all right, that's really what stock trading is about. All right, so check that out. Link in the description below. Let's get into it, guys. CCJ. Wait, I want to start at the very top. BBIO. All right. So again, guys, I'm just asking you to put one or two up there. So pick your favorites. All right, biopharma. All right, this thing's obviously, this one's, these bio names. It's pretty new. It's crashed. Potential signs of a bottom, or not exactly a bottom, but we're starting to show bullish divergence. Okay, on both momentum indicators. Doesn't mean it's a bottom right now. It just means that the conditions are starting to show up that it could be a bottom. Not my favorite trend line here. All right, I only have 1, 2. Like it's just not clean enough to say, oh, this is a good trend line. Maybe something like this. All right, so there's a potential bullish falling wedge with bullish divergence. If you see a big gap up, some sort of a gap up or a big green breakout candle, you probably could take that as your buy signal and look for gap fill. All right, way up here. Let me just double check. There's nothing else in the way that would. Maybe right there, guys. I just would have to say, not my favorite chart. All right, I think there's better trades than messing with this one. Might find some resistance there. So, all right, 25.66 gap fill, 35.77. That's the potential. Not my favorite. All right, moving on. Hope you guys can hear me okay. My audio is, I've been tweaking with it. I've got this gain dial on the mic, and I've just been moving it around, but I can't hear my audio typically, so I've been trying to get it dialed in. AVGO, Broadcom. Okay. So Broadcom had earnings. I know that they had some sort of bullish earnings, but look where we closed, guys. It's just right there at that resistance level, all right? 593, it's a little bit above it, but again, this is a $500 stock, so you can give it a little wiggle room, all right? My level might not be perfect, or they're just gonna, they just closed it right in that area. It's not a breakout, All right, it doesn't look like we're running to new highs. You know, for that you'd want to see a big green candle that would stick, you know, on the daily close. So all I see, you know, I think there's more downside here. I see this counter trend. I think we started this downtrend, and again, part of this is just going with the triple Qs analysis and where I think that's going. But we got this downtrend line. All right, momentum has been moving up recently through here, and price has been moving up. There's no divergence. All right, so we could go a little higher, and you know, and maybe put in negative divergence, and then start to head lower. Bigger picture, you know, we've got this level of support here on Broadcom. This starts back in May of 21. Lots of reactions along this. So I think it's a pretty good trend line. All right, so at the end of the day, maybe run up, put in negative divergence, then roll down. All right, for me, like, I'm not interested in shorting this thing until we can break this trend line here. I'm looking for that. Until then, I'm just going to let it do its thing. You know, I did trade it up here. Again, I got short right here. If anybody is, you know, if you've been following me for a couple months, you know that I shorted this thing right up here at major resistance at back here in December, because that was a big trend line resistance right there. So it looked as great as a short, and it was. I mean, from there to the drop was 23%. So I think that's your first leg down. You know, could be a big flag, but the flag's gone on long. It's not really a flag. I think it's just this counter trend bounce and hit, and then we probably go. That's what I think. I don't know, but all right, moving on. CCJ, what is that, a pot stock? What is that one? Cameo, this is uranium, right? Cameco, aren't these guys, I think these are uranium miners. I heard somewhere that I know there's a whole YouTube group that touts uranium and I think fundamentally it makes sense, you know, because what they say is like, look, the world's trying to wean itself off of oil, but it needs a new source of power, and wind and solar is not strong enough to do it. So nuclear is a viable candidate. That's the whole fundamental basis, and then I think there's also like a low supply of it or something. Makes sense to me fundamentally. Let's look what the charts say. Bull trend, little false breakdown here as far as I can tell, and it was a recovery. So I see a bull trend. This was negative divergence right here, so that was a divergent high, that was a divergent high. We did get, you did get a correction right there from those highs down to the lows, about 36%. The thing is, it's popped back above and recovered that bull trend. A little choppy through here, that's for sure. Yeah, I mean, if I had to, I would just go with the trend right now, guys. Buy at support. That's what I would see. You just buy at support, and let it do its thing. Now, if it runs up and pops above here quickly, then it will likely be another divergent high, and that would be ominous. You might want to sell into that. But right now, I don't see it. All I see is a bull trend, and that could continue, or it should continue until something else shows up. PLTR. And uranium's a commodity. All commodities are bid right now. That's why I like gold and silver. I want to show you guys silver too. I think that one's really, really looking good. I'll do that one next. But that's why gold and silver look really good to me, because those are commodities, and they were kind of left in the dust. What I think actually happened is gold and silver ran first, then they took a breather when all the other commodities caught up, and now gold and silver is ready to resume the next leg, while maybe these other commodities are going to take a breather. I think that's probably how it's going to play out. And if it does, we'll just rotate. We'll just rotate into them. PLTR, Palantir. I know these guys put a bunch of cash into gold bars. I heard that. That was probably a smart move, I think. Downtrend. Bullish divergence. again, I just reiterate this: bullish divergence is not a reason to, like, that doesn't say what bottom's in. All that says is, okay, the conditions are right. But again, this can just extend. We can just continue to drift lower while this divergence builds and builds and builds. And then 2 months down the road, we get the breakout. So what I would need to see is a bullish break of this downtrend line. Until you get that, it's not a buy. So that's your buy trigger whenever it comes. And then there is a level right here, 1716. That would be my target, most likely. All right, that's all I have on that one. Nothing's changed. LMND. LMND. Lemonade. Yeah, this is another one of those like momentum Kathy Wood meme things that everybody was super hot on. You know, obviously it's been bombed out. Maybe I shouldn't use that word. I don't know what the YouTube algorithm does. Downtrend line, yeah, clear downtrend there. Somewhere right in there. Looks like it's at or near support. Slight bullish divergence on the RSI. Barely hanging on to bullish divergence on the PPO. Looks like that, you know, looks like a downward channel and at or near support right in here. So I don't know, could do this. I'm not really interested in this unless I saw a bullish breakout of this downward channel. Pretty tight channel too, so I think it makes sense to just let this thing do its thing until you get that bullish breakout. You will have a bear market rally in this for sure. You know, but when does it come? I don't know. And this thing's relatively new, so we don't know. This could just go down for years. They could go bankrupt. Who knows? A lot of these stocks IPO'd and came out. They're not profitable, and they just IPO'd into a market frenzy. Just because their stock went up, that doesn't mean they're profitable. So they could come out and just go bankrupt. It's completely possible. What's been keeping these things afloat and in business is the fact that they've been able to sell shares. All right? If they can't sell shares and they're not profitable, they go out of business. So, yeah. Hey, Google. I've talked about Google as a bottom. I'll get to that. I'll show you. It's really easy from my perspective to see. Hassan, I think I did one of yours already, didn't I? Yeah, I looked at Palantir. So, I'm just scanning through here. Net. All right. So net. I would say lower, guys. Big flag. If you want to, this could be a big flag with a big, a big flag thing like that. We could, boom, just bomb out and head lower. So I'm thinking lower. All right, that's my gut on this one. We just cut. We didn't even. We got close to the 200-day on 2 occasions. Boom, boom. Couldn't break it. I don't think this is going to break the 200-day. I think we're going to continue lower. So my target still stands 61.83. There's some support down there. That's where I believe this is heading. Maybe get a bear market rally after you hit that. I don't see any signs. And look, this one traps a lot of people because it has such huge days. It'll have like a 15% up day like this, right? Big bullish engulfing candle for sure. And so it keeps people long, everybody piles in. Again, that's momentum traders. All they're doing is looking at price action and jumping on something because it's going up, thinking that it'll continue. But I just don't see that. I see lower prices here. Yeah, GPL. So I have a position in this, full disclosure. Talked about that. This is a penny stock. So I don't have a large position. But, you know, it's just sprinkle a little on this one, grab a little icing off the cake, and basically downtrend line there, bullish divergence. This was a setup for a while. I just had it on my radar, but wasn't taking action on it. Finally starting to get the breakout. It's not as impulsive as I'd like to see. That's definitely for sure. It's kind of just, you know, so it should get impulsive next week. If we don't see some sort of, I want to see bigger green candles where all of a sudden people are noticing this breakout and they're flushing it, you know, they're piling in. That's what I'm looking for. And I'm looking, boom, it should run up and gap fill pretty quickly, okay? It probably won't gap fill. It'll probably get close. So, you know, it's such an obvious gap. So if we get close, I would, in my opinion, I'm taking profit, you know, if we get close to gap. All right, that's just what I'm planning on doing. So you'll probably see one day where you get this big, huge wick, and it gets close, and I'm looking for that. When I get that, I'll take profit. And this could obviously go a lot higher, but I'm not getting married to this thing. I don't want to own these, you know, junk stocks like this. I just want to trade them. All right, looks good though for more upside. All right, Danny asked for Carg. I have no idea what this one is. I've never heard of it. That's a big green candle, obviously earnings based, yeah. It's not bearish, really. I mean, you do have some bearish divergence from way back here. There is some bearish divergence. I don't know. Honestly, with the environment that we're in and where the market looks like it's going, if the market continues to trade down, these things are going to trade down. So I probably would have taken profit on this big rip. You know, you get a big earnings-related rip. You know, I'd probably take profit. Potential bull flag, maybe, but I don't think so. Probably just this rip, and then it's probably going to come back down to the 200, chop around some more. And from there, I don't know. There is, you know, you could mark this out, get this on your radar, this trend line here. And, you know, it's a ways down there. It's not, you know, until you break that, this thing's not, it's not bearish per se, but big pops like that, I probably would take profit. But, yeah, so as long as it holds trend, you're probably good. That's what I would say. Hopefully you didn't buy it after earnings and chase it. All right, SLV, I do want to talk about silver. This one is looking good. So silver, I've got this trend line marked out. I was playing with this on Friday trying to find, you know, this is where I think the trend line is at, right about here. Clear breakout. We had a breakout. Wasn't that impulsive, but here obviously it was because we gapped way up. They sold it down, back tested, and off we go, closing, you know, at the highs. So it looks like this, you know, we break out, back test, bounce, and off we go. So bullish price action, we've confirmed the breakout. It's everything you want to see in terms of what that price action should look at. Bullish divergence was intact, all right? So there's your last divergent low right there. That was a good divergent low. And look at this one. I own this one. I added to this on Friday, but PAAS, all right? Down. This is a silver miner downtrend line here on PAAS. Bullish divergence, all right? That's intact. Bullish breakout of the trend line, all right? Right to the 200-day, or not quite, you know, so you didn't know if it was going to break the 200-day on Friday. Pretty impulsive breakout, all right? Up 3 or so percent, but breaking and closing well above the 200 days. So putting the 200-day below us now should be support. So we'll probably test it again, but ultimately bullish, all right? And it's just starting, in my opinion, so just starting that breakout. So I would expect that we're probably, I've got a level of resistance here at 29.19, so maybe there could be another level right in here. You know, I could mark that out as well. Something like that. That looks like a decent level as well. 28.33. So we'll probably run up there, get a pullback, and then continue the upside. All right. I'm not thinking it's just this, and then we continue the downtrend. I'm thinking like that, and then boom. All right. I'm looking for all-time highs on this one, and quite likely beyond. All right. So I like that one. Just getting started. Qualcomm still looks good as a short, guys. I'm still short that thing. There's no change. Just go back and look at one of my videos. You'll see it's just still kind of within that range. There's no change there. All right. Google. All right, I'll go quick on this one because I've definitely commented on this. There's the bottom that I'm thinking. All right, it's down here. All right, if you look, and I don't know where it's going to be because this is it's a trend line moving up, so who knows? But if I roll out, that's 2015. All right, on the daily chart, support. This is COVID, this is like an outlier. All right, if anybody has done any data plotting, you'd want to throw out the outliers, the extremes. All right, so that we throw that out. All right, and then, somewhere right in there. Okay, so I'm thinking it's down at like 2,000 up to, I don't know when this is going to hit or get close, but that's where I think the bottom is. That would still keep your bullish trend. It could be a lot lower, but for now, you would have to break that trend to say that this bullish trend is done. All right, and hey, thanks there, Deji, I don't know how you pronounce that. PANW. So that's just a trade I've thrown out there, a potential trade idea. Palo Alto. So far working out exactly like I pointed out. All right, this is exactly how I covered it before it had done this move. And I think it continues, all right? I don't see any reason why it wouldn't, all right? We entered this trade. I got in this trade right up here as it started to fade, and there was all kinds of signs of sell signals on the shorter time frame on this hourly chart, and it's drifting lower. So I think we go back down to this trend line. I don't know when we hit it, so I don't know the exact price, all right? But I think we go down to this trend line. That's your bullish trend. Boom, boom, boom. All right, negative divergence. I think what happens is we go down, we probably get a bounce down there, and I think we break. But the way I'm trading this, I've talked about this, is I'm shorting it down. All right, I'm shorting this down to the trend line. Whenever it gets there, I'll cover. All right, if it bounces, fine. I'm just gonna leave the trade alone at that point. And then if we get the breakdown, the sell signal, I'll reshort it. All right, that kind of gives me safety. It gives me profit. It gives me safety. It's all about managing risk, right? And it gives me confirmation. So I'm waiting for, that's how I'm trading this thing. And I don't see any change in that. Yeah, Microsoft is going lower, most likely. All right. Greg, LM. We can look at Bitcoin, guys. It's not my favorite. I just think it's like momentum, speculative. Potential double top here in Bitcoin. I see that. Kind of range bound, basically. All right, there's the range. Bottom of the range, 30,995. We call it 31. Top of the 200-day moving average is where this thing's getting rejected. All right. So 200-day moving average, top of the range, bottom of the range, 31,000. Until then, it's just range bound. All right. So there's nothing to do. Right here, there's nothing to do. You could short it at the 200, right where it was at, but you're well off that now. So you could go long down at the bottom of the range for a bounce, or wait for a break of that range for a sell signal. That's all I see in that one. PayPal. A couple more minutes, guys, and I'm going to wrap up. you know, okay, so PayPal, it was a long idea, but I talked about exactly where I was looking to exit. And I did not like how we were getting down back to here, and just, you know, the buying was not impulsive. We broke out of this short-term downtrend line, a little bit of buying here. There was no follow through. So once I noticed that, I put it out there in my channel that, okay guys, doesn't look like it, you want it, so we're going to want to keep a really tight stop. And I talked about a break-even point stop for me, which was right at this level. That's exactly what I did. Stopped out of the trade at break-even, you know, and just let this thing do its thing. So, you know, look at the, I'm just, you know, look at the momentum on the PBO. It's still, you know, it's still dropping. I don't see the, you know, I don't know. I don't see signs of a bottom yet. We might grind out a bottom down in this area, but I just don't see it yet. So nothing interesting there. All right, moving on. Yeah, Jonathan talks about using inverse ETFs for shorting instead of actually shorting, and you can do that because in order to short, typically you need to have a margin account. In order to have a margin account, you need at least 25,000 in your account. That's an SEC regulation, so it's just part of the rules, and so that's how that works. If you're going to use inverse ETFs, understand the decay does matter. So there is a little bit of timing element built into those things, which is why I don't prefer to use those, because you have some decay, because they roll options essentially, and I think futures as well. But so there is time decay. Now, if you get the timing right, those things benefit more than even, you know, they will benefit from that decay. That decay actually acts in their favor. But if you don't get the timing right and something just chops around sideways, that decay will take away your gains. So pluses and minuses to everything. Cool, thanks Mike. Glad you took the course. He says it's worth $1,000. Well, hopefully you've been able to use it to get your money back and make a lot more. That's really the goal here, is, you know. I was thinking, honestly, guys, about taking the course offline for a little while, kind of do the Disney Vault thing. I just feel like, you know, there is a lot of value to that course, and I obviously, you know, I've talked about it over and over. And if you haven't taken it, then obviously you're not going to take it, or you're not interested, so it wouldn't necessarily hurt to take it offline for a little while, and then I could put it back up in 6 months or so. But, you know, haven't made my mind up yet. Hood. All right, so that's just really speculative, super new, not a lot to chart on. Potential bot. All right, I covered this one. Bullish divergence. We got a breakout. All right, it's been knocking out a bottom, basically. Look, you got another divergent low right there, and kind of creating this secondary downtrend line, it looks like. I'd probably go to the hourly to fine tune this. All right, something like this, and yeah, like that, I guess. And if you get, you know, if you get the bullish breakout, then that's probably your buy signal on the hourly or on the daily. All right, this could just do nothing, could go lower. You had, I mean, here's the thing about this, all right? One of the things that, all right, you have this downtrend line right here on Hood, okay? And we got a breakout right there, but it's not that impulsive. See where it closed? So it was a pretty impulsive candle from way down here, but it wasn't really that impulsive on the breakout. I want to see something where you get, boom, big green candle, and it closes on a nice solid break above that breakout point. This had to build its way all the way, you know, from right here, and it traded way down here, and it just, you know, from the actual line, it only was up 3.5%. It's just not that impulsive for this one. So that's why I think you just haven't seen that follow through. Now, yes, here when they tagged it, boom, buyer stepped in. So it's pretty obvious that the buyers are looking to buy at support. So the next, if you get a big green bullish break out of that candle or at this downtrend line, that's probably your buy signal. All right, that's what I would do on that one. That's how I would treat it. You can take your course at my own. You can take the course at your own pace. What I did is I broke the course out into about 5 or 6 videos. I don't remember the exact count, but I basically went through all the concepts of what I go through in my mind when I'm looking at trades, and I broke it out into concepts, and I go through each one of those concepts, and they're about 45 minutes to an hour, or some may be a little longer than an hour each one. So it's 5 or 6 videos. And then I also have a checklist that you can look at to cover all the. So when you're looking at a trade, you can kind of really evaluate. And I do a lot of the analysis just naturally in my head because it's repetitive for me. But if you're new to it, I think you really want to look at each step and just check it off the list. Okay, check. Okay, I got a good trade. All right, I'll take the trade and then I'll manage risk. All right, that's how you want to approach it. So that's everything I go through in the course. The other thing is, guys, if I do take the course offline, I was thinking about maybe going back in there and taking a look and maybe revamping it or doing a new version. Otherwise, guys, but I do suggest you take it. I think it's a good look. I would pay for it if someone, if I was following someone on YouTube and they were showing me good trades. I don't get all my trades right, but if they consistently showed me more winners than losers, or laid out the plan, I would take it. For $99 to learn a new skill like that could potentially pay you a lot more. It's a no-brainer in my mind, but who knows? All right, guys. Yeah, Newmont, Greg, I love it. Looks good. We're cashing on these gold miners. All right, that's just the name of the game. And again, if it's all about how we got positioned early. All right, so now we just ride that thing. We're not chasing. I'm just scanning now. I need to get going here pretty soon. Carnival. No, I don't like it. Potential rounding top is one thing I see. There's a potential. The thing is that you've got, look, you've got, no, I don't like it because look, this is above this, so it's not divergence. All right, you've got momentum, it's above there. Those are the same, so no divergence. Pointed straight down. RSI is pointed down, PPO is pointed down, price is pointed down. I don't know. Looks like it's going lower. I wouldn't buy it here. Need more signs. Maybe it could spike down and make a new low, and then have bullish divergence, and then we'll start looking for trend lines to break and signs of a bottom. But I don't see it right now. Yeah, financials. XLF, guys. So they're trying to hold this 37. I was watching this Friday afternoon, and like in the last 5 minutes, they came in and pumped it back up above 37. You look at the hourly, look at that. And this happened in the last 5 minutes. So it was drifting and then boom, pump. All right, so 37 is a key level on XLF. It's pretty obvious now. Resistance through here, support, support. All right, 37. You break that, and the market, the broad-based market's likely going to roll over. We still held it though, so it's not broken. Hey, thanks, Acupuncture Herb, DKS. Which one is that? Is that? Oh, Dick's Sporting Good. All right, so this is a retailer. You've got, I have to kind of, I had it here before. wherever I put this, it's been broken. Let's just put it that way. Maybe it's that. That's not bad. Regardless, it's been broken. So, all right, we've got lower highs. We're downtrending. Lower lows. That's a downtrend. So recognize the trend. Counter trend bounce into the 200-day moving average. So far rejected. Now we chopped above it here, so we could pop above it. Can't say the 200's the end all be all, but just recognize that it couldn't, just rallied into it and it couldn't break above. So I'm just kind of trying to see what we got going on here. What I see is just a downtrend. I see momentum downtrending. I see price downtrending. Yeah, you maybe want to mark this out. This looks from the highs, something like that. Sorry, gotta grab that one. Something like that as your top line trend line. And then down here at the bottom, they're probably, all we have is 2 data points. So all we can say is, unless this one, yeah. So we don't have a clean support line yet. It's just not obvious. You can't mark it here because that's only 2 data points, right? 1, 2. I teach in my course you need at least 3. So all we have is 2. So I can't say that's support because I could say, well, maybe it's here, and 1, 2. I don't know where it is. So in general, I would just not have it there and look for some horizontal support lines. Looks like we got some support right in here. Okay, right in there. They stepped in a little early. All right, so that looks like support to me, 91.86. All right, so that's support. Looks like we're at resistance. I don't know. I think we go down here, and then we'll see what happens down there. All right, moving on. If that breaks, then look for, if that breaks, we go lower. All right, and there's some more support here. Next level of support looks like it's about 80, 90, or 81. And then you've got another potential level right here. Yeah, that just somewhere right in there. And that is 50, 62. And that's it. That's as far as we need to go. I'm not saying it's going down there, but there's some levels to watch. Yeah, hey, I'm not going to take down the course for people that have paid for it. What I would do is, I don't know, take the, I'll figure it out. I don't know. I honestly, I haven't thought about it. But look, if you paid for it, you own, that's you paid for it. You'll have access to that course, okay? But what I was thinking about doing is updating it and, just not continuing to have to talk about it every single day in the videos. And so just put it into the vault, and if you bought it already, you'll have it. And if you haven't bought it, it would just be, you wouldn't be able to buy it for a little while. I'll figure that out. Don't worry about that. All right. All right. And yeah, guys, look, if you bought my course and I update it, you'll get the content. All right. I'm not going to try to charge you again. All right. You'll get the content. All right. If you haven't bought the course, maybe you won't be able to buy it for a while. That's all. That's it. That's all I'm talking about, guys. All right. I'm going to do 2 more and then I got to get going, guys. Well, T and X is your interest rates. So that, shop, huh? All right, here's one. I'm going to do one more. No. No, your bullish divergence is not building. Here's the thing. Yeah, you have it right here on the RSI. It's it's there, but look at the PPO. And ideally, for the best trades, you want to line up, both of these momentum indicators. All right. So look, pointed down, lower lows. All right. So you don't have bullish divergence on both momentum indicators. You just have it on the one, and this is pointed down. This can very easily, you get more selling, and boom, this is gone. So it's not enough to say, oh, I'm going to go long here. This is the bottom. It's just, I just don't see it. Now we have a support level here at 603, but look, we're down at those former lows. You gap down on Monday. You take out the former lows, you take out whatever divergence was kind of there, and you continue lower. So this one has a ways to go, potentially, all right? Here's your uptrend line, all right? Clean uptrend line, broke trend, and we're in a downtrend. And downtrends don't just end, like, this is going to continue most likely, all right? This has to get really bad before we can say this trend is done. Now, yeah, there could be a bounce here, but we already got the bounce. Look, you hit the level, you bounced. So I think lower, all right? Where do we go to next? Because I don't have any levels really marked out. Maybe right there. Somewhere right in there, possibly. That's about as good, that's about the next level that I can find, which is about 287.30. Man, that's down there a ways, isn't it? I know it doesn't look like a lot because of the log scaling, but you take log scaling off and it's all the way down here, guys. Log scaling is how you chart, all right? That's what the pros use. And look, if you're not using log scaling and we get down there, you're like, oh, it crashed, and yeah, it basically did. That would be, yeah, that's where I think it's going, I guess. All right, that's all I got on that one. And then one more, and I'm going to wrap up. Let's cover JWN. I know they had really good earnings. I've seen some of these retailers catch some strong bids. Yeah, but look what it did, guys. All right, so JWN, JWN's been in a bear market. It's a little bit different than some of these tech names. It's already been in a bear market. This downtrend line is what I would key off of, all right, on the daily chart. Look at all those reactions there. Nice trend line that's relatively validated. Another reaction here. Let me extend this out here. All right, look right there. That's a divergent low. See the bullish divergence that's been building or was intact. So you hit that divergent low at major support. That's a buy zone. That's objective to buy there. All right, because you're buying at major support with bullish divergence. All right, that's a good place to take a shot at buying, and then you just stop slowly, slightly below. All right, that's a low risk area to buy because if you're wrong, you're wrong small, and you know exactly when you're wrong, and if you're right, which you should be, probability says this is the spot to buy at, and it was. All right, we rallied into resistance right there, overshot it because it came on earnings, so a lot of momentum. So where does it go from right here and now? I don't know. We could come back down and fill the gap. I don't know, but and you got the 200-day coming down, so I don't know. It's probably going to go higher. All right, you're going to get maybe a pullback, maybe another day of pullback, maybe not. I don't know, but I think you're probably going to run up at a minimum, hit the 200, and maybe go like that up to the next level. This level, that's a decent level, and it's about 30.76. The other thing is, look, you got this gap right here, gap. Typically, when you enter gaps, you fill them, and you have entered the gap. So I would put the probability that this little pullback will get bought into. You're going to run up. You're going to fill the gap. That would be my target for now. if we're going to go into a bear market, then this thing will get dragged down as well. But we could fill the gap. All right. So if you're long from down here, you probably just, in my opinion, I just go for that gap fill. But if you don't have a position, I don't think I'd take one right here. It's not objective to take a position right here. I'd rather you take it down here. And this, I just let this thing play out. That level, that gap is about 30.77. Okay, guys, that's all I have time for. Thanks for joining. Drop me a thumbs up on your way out. Check out the course. There's a good value there. I'm being honest on that one. And then I will catch you guys on Monday. Good luck.